Chief Executive of Lincolnshire Chamber of Commerce. Delighted to see so many of you on the call today. There are a number that are joining us as I speak. So what I'm just about to do is just make sure that you all can hear me okay for a start. There are a couple of ways of telling me whether you can or can't. At the bottom of the screen, there's a little button you can press to chat. Any chat will then come through to us. Or there is an option to raise a hand as well. So if you click on participants and then over on the right hand side, you will see the ability to raise a hand. This will become useful as we go along as well. But for now, if I don't see any comments and I don't see any hands raised, I will continue as I am. Thank you very much, everybody, for joining us today. This is a different way of us for doing things to what we would normally do. So we would normally run networking events where we'd be able to see each other, where we'd be able to interact, etc. Obviously, the times that we're in, we've had to do things slightly different, but we hope you'll find today's event just as informative, just as useful as what you would our other events you would physically go to as well. What we have to just tell you at this stage is that we're going to be recording this throughout. The idea of that is if you want to go back to it, there's a reference point, but for others who are not able to join us today, then there'll be an opportunity for them to pick up on some of the information and advice that you'll find throughout this as well. It will be hosted on our website, links-chamber.co.uk, and there's a section there for COVID information, which I'll say a little bit more about later as well. So just before we go on to the main bit of the webinar today, just what I'd like to tell you a little bit about is what the Chamber's been doing over this, what now seems to have been going on for quite a while, but if you look back has really just been the first part of this year. What we have been doing has been to contact our members on quite a regular basis. We need to know from them what the impacts they are feeling at the present time, what information that they need passing on to others to recognise the circumstances that they're in. That doesn't mean that we'll only be contacting. If you've got a particular issue, we are here to help and support as well. So please do let us have any concerns that are affecting your business at the moment that you feel a larger organisation like the Chamber might be able to help with as well. So actively what we're doing with those things, we're lobbying on a member's behalf, and what that means is that we're working with the rest of the 53 chambers in the United Kingdom. We then have a voice in terms of raising issues with government. And we're doing that on a regular basis. We're having conference calls daily to make sure that information is passed on to the right people at the right time. If you haven't looked at our website so far, we've got quite an extensive range of information on our COVID-19 hub. Please have a look there in terms of the range of support that you can find. And it's a reference point that's updated daily, if not hourly, as new information comes along as well. We've been sending out information to our members on a regular basis, whether that be by updating the web or e-shots. LinkedIn is another platform that we're using in terms of making sure we've got that message put across. If you're not following us on LinkedIn, make sure you are, and we'll keep you up to date with the latest information as it comes out. And I suppose these events that we're doing today are part of the feedback that we've come back from members. At the end of this today, I'll tell you about other forthcoming webinars that we have planned. But what we are doing is trying to react to some of the issues that are current and that members want to hear more about. So without further ado, in a moment, I'm going to introduce you to Lewis Stringer. Lewis is the Senior Manager at, his title, Senior Manager UK Network, East and South East Midlands British Business Bank. So a nice, short, snappy title. Lewis is going to tell us more about the funding support that's available through the British Business Bank. It will form a presentation for a start. We've got some pre-scripted questions that we'll ask then, and then the floor is open for you, either to use the chat box, which is at the bottom of your boxes there, or again, to raise your hand and we'll come to you and you'll be able to join us in picture or in sound in terms of asking your own questions to Lewis. We've got a period of time until 3 o'clock today. We think it's going to be action-packed, so make sure you get your questions in early. But hopefully Lewis is going to be there, and I'm going to pass you over to him to start off the presentation part. Lewis, over to you.
Thank you, Simon. I've just unmuted myself, or somebody else has, so that's really appreciated. Thank you very much to yourself, the Lincolnshire Chamber, Hayley, for inviting me along. I'm going to very quickly go through what the coronavirus business interruption loan scheme is, just as the slides are being put up. That's great, thank you. Just to introduce myself, I work for an organisation called the British Business Bank. The British Business Bank are government's economic development bank. We've been established for almost 6 years now, and our role and function is to make it easier for businesses to access finance. One of the schemes that we operate is called the Enterprise Finance Guarantee Scheme, that's been running for 30 years. And the scheme I'm going to talk to you about today is one of the government announcements over the last fortnight and builds on our experience from the Enterprise Finance Guarantee Scheme. So what we're going to touch on this afternoon is actually what the scheme is, particularly focused on what the key benefits are for businesses of the scheme, and talking in quite generic detail, high-level detail, what the eligibility criteria are. I'm conscious that there are a number of businesses on the line and they'll want specific details. Again, it become clear in terms of how the fund operates and what your first point of call is as well. Thank you. So the scheme was set up by government and announced, I believe, on the 11th of March. I'm losing track, I don't know if you are. And actually further announcements were made the following week on the 18th of March. What it basically is the guarantee to lenders to enable them to make more positive lending decisions. So whereas they may have said no to you if you were submitting a proposal for borrowing, they are more likely to say yes as a result of the fact that we're going to give them a guarantee to encourage them to support businesses in the current circumstances. It works on the basis that we have over 40 accredited lenders. They are high street lender all the way through to smaller lenders who are able to actually operate the scheme and operate the previous Enterprise Finance Guarantee Scheme. But what's important to say is the scheme is delivered through the lenders. The lenders are the ones lending the businesses the money, not the bank. All the bank are doing is guaranteeing the lending they're doing to encourage them to lend more business and to also look at risk and security in a different way to what they do normally. So what's important to note as well is that the last announcement that was made on the 18th of March talked about a sum of £330 billion. So what I would say to you is that although we're a public body, it's operated through the banks, and actually there are substantial funds available to you. So what I'm going to keep stressing to you is if you're able to, just take a breath, take 5 minutes and do some preparation and planning. But we'll talk about that as we go along the scheme and explain to you why that's important rather than just simply going in and speaking to your lender straight away. And I know there's some urgency around the situation. So let's talk about what actually the scheme itself is. I'm going to refer to it as CBILS rather than the longer version of it. What it basically does is enables banks to provide facilities up to £5 million to a business. And the way that we do that is we guarantee 80% of that facility with the lender. That can be offered as a loan. If it's a loan or if it's asset finance, then we can look at it as over a 6-year period. But we can also guarantee facilities such as invoice financing and also overdraft facilities. If you're looking at facilities and they are secured under CBILS, then that's a 3-year term. And what we basically do is we provide the lenders with an 80% guarantee if that facility goes wrong. What does that do? Well, it encourages the lenders to make offers of facilities that they wouldn't do necessarily because of the risk, because of a lack of security, etc. So we're leveraging the guarantee to get more money into the marketplace and support businesses at this critical time. What's also important is we've been able, in a very quick period of time, less than 2 weeks, to actually make it more SME friendly. And what I mean by that is that some of the criteria of the previous scheme involved the SMEs themselves paying a fee for the guarantee. That is now waived, so businesses will not pay a fee to actually have a guaranteed loan through the lenders. And also what we're also doing through government is that we will pay the first 12 months of interest payments that you have to make on the loan. We'll also pay the initial fees incurred by the lender, which would normally be charged to you. So typically they're arrangement fees, they're security fees if they're taking security. So again, what we're trying to do through the guarantee is to make that initial loan as cheap and easy as possible for you to access in these difficult times. So as I stated earlier, we can guarantee most of the standard ways in which businesses are funded by lenders. So that's term loans, that's loans, it's overdraft facilities, It's also invoice financing and asset finance facilities as well. What we've also done is, whereas the previous scheme was very much around assessing the levels of security in a business and taking them, and if the security wasn't sufficient, then looking at the guarantee, what we've said to the lenders at their discretion that we are happy for them to provide unsecured facilities up to £250,000. I know one of the questions will happen that actually in reality that's not happening, but let me talk about this first and then we'll come back to that particular issue. For facilities over £250,000, the lender must establish whether or not the business has security available to it and look to take that security if possible. And if it's not possible, or there is still insufficient security to give them the comfort to lend, that's where the guarantee kicks in as well. If the lender can offer normal commercial terms without taking the guarantee, they are doing that. And what I would say is that over the last 2 weeks, most of the high street lenders have been approaching their portfolio companies and offering repayment holidays over a 3 to 6 month period, because that's actually more important to the business short term. So again, you're still approaching the bank. Don't necessarily approach them on the basis that I've heard this government announcement, can I get this loan? Actually, you're approaching the bank to lend money from them. And if they determine that they can't do that without the guarantee, that's where the guarantee and that's where that scheme actually comes into place. What's also very important for you to notice is that actually the guarantee is with the lender, it's not with you. And I know there's a slight misconception out there that actually, because we're guaranteeing the loan, that actually you're not liable for it. That will remain the case. So it's still a loan that you're taking out, okay, that you're liable to repay. But again, within that, we will guarantee it to enable it to happen, and we'll also pay the first 12 months of interest payments and also initial fees as well. So just to reiterate, the government's made a commitment through the scheme, which didn't exist previously, to pay the first 12 months of interest payments and any lender levied fees. Again, as I said, those are typically arrangement fees and security fees. And that's to ensure that businesses in the current circumstances don't face any upfront costs as a result of securing that lending, and also benefit from very lower initial repayments from the outset. What we've also done over the last fortnight is actually spoken particularly to the high street lenders through UK Finance to make sure that from an arrangement fee, from an interest fee point of view, that they actually pay fair, and actually they recognise the fact that because we're giving them a guarantee, which is far in excess of the previous scheme for a number of reasons, that actually they reflect that in the pricing of loans as well. As a result of that, a number of the lenders have actually said that they would waive arrangement fees in the first instance. And again, just bear in mind that we're a public body and it's all coming from the public purse as well. So, in terms of eligibility, and I'm going to pause on the point in terms of viability, because that's an area that's often come up over the last week since the fund was launched. Viability, what does that mean? Well, typically it means that you're generating profit as a business. I had a great quote thrown at me yesterday. The nature of the scheme is such that, look, if you've run a successful business up to 2019, in the last couple of months, you have still got a successful business, and you will have a successful business in the future. I think that's a very, very important message to say. But what you need to be doing when you're approaching the lender is you need to demonstrate that you did have a viable business up until the current situation that we find ourselves in. How do you do that? You do that by preparing yourself and making sure you have the most up-to-date financial information available, because the lenders will still require that as part of their assessment of your proposal. What I'd also suggest to you in terms of planning is that we fully understand the current circumstances that we're all facing. You will be asked for financial forecasts. Financial forecasts at any time are quite difficult, but in the current circumstances, they're very difficult. So actually what the banks will be looking for here is how the current situation and COVID-19 is going to affect your working capital over the next 3 to 6 months. So what they're looking at are what are the costs that you're incurring or will incur that you can't manage or manage away. And as a result of that, because you won't be getting the levels of revenue or revenue streams that you'd expect to cover those costs, what the implications are for your cash flow and working capital. So effectively, in most cases, you're applying to the scheme on the basis that you need to cover your working capital and cash flow requirements under the current circumstances. But it really does require you to give some thought to that, prepare, either if you're capable to do it yourself, but we'd always recommend actually working through accountants and advisors to support you in terms of putting those forecasts together. It's very important to do that, and it will often expedite the actual loan application itself, because I know one of the questions we're often getting is, how long will this take? One of the ways that you can help the process is making sure that you're properly prepared before you approach the lender. In terms of lack of security, and again, this is a question that we are getting a lot in the first week from businesses and their advisors, is security. Now, it'd be fair to say that high street lenders will always look to take security, and sometimes, depending on the nature of the business, they will look to take personal guarantees. And I know that's an issue for all, if not most, business owners in the country. What we've done, however, is we've given the lenders flexibility to use our guarantee to provide facilities up to £250,000 unsecured. Now, it would be fair to say that in the first couple of days of the scheme, not all high street lenders were doing that. They were still taking personal guarantees. What you would have seen in the press and through government announcements is that actually that's changing, and it's changing day by day. So what I would say is keep on top of that, try to get the latest information from either our website or from government websites or the bank's own website, because literally day by day they're changing their approach to the scheme. It is new, it's all being bedded down, and we're all learning as a result of this, okay? But for facilities over £250,000, they will look at what security you have in the business and they will take it. As with the predecessor scheme, CBILS is no different, and with this scheme, they will not be looking to take your home as security. That's never been the case, and it will never be the case under this scheme, okay? So they will look at other personal assets potentially, but more importantly, business assets. They cannot use your own personal house, your principal private residence, as we call it from a technical point of view, as security. They can't do that. So if there's any misperceptions or misconceptions out there, or if you hear that, you must come back to us, because that is not the case in terms of CBILS. They may take it on their own loans that aren't guaranteed, but not in that scheme. And in terms of what we've also been able to do is that the predecessor scheme had some sectoral restrictions, i.e. it couldn't support certain sectors, but now most sectors we can support under this scheme. So we've got special dispensation to support sectors such as haulage, agriculture, fisheries and aquaculture. I know some of those are particularly important in terms of Lincolnshire and the county's economy as well. A number of people have come back to us and said, well, we've had government assistance to do this and government assistance to do that, and got R&D tax credits, or had some support, grant support. Because of the way that we've been able to do that, we've got what's called a notified scheme. You don't need to worry about anything other than the fact that actually, if you've had previous state aid, in minimis or other forms of state aid, in terms of accessing this scheme, it does not stop you doing that. We've got a separate notification. You can just apply to scheme without worrying about the other state aid that you've actually benefited from in the past. It is not an issue, guaranteed it. So before I finish and open to questions, there are a couple of websites that I desperately want to make sure you're aware of. The first is our own website, which specifically talks about CBILS and the scheme itself. We are genuinely updating this on a daily basis, and actually that has a number of pages which talks about the frequently asked questions. We update that again on a regular basis, and part of that is as a result of feedback we get from webinars such as this, or the Chamber, or other support organisations, or from SMEs directly. So keep an eye on this website. As I said, it's the first week of the scheme. It only started on Monday. So there are a number of fundamental changes that are happening to the scheme, but most of those are positive for SMEs. So please keep yourself updated. What we've also done as an organisation, we have a document called the Business Finance Guide, which talks about funding, how it works, and the various options available to you. And actually, with apologies, I've just noticed that we've just literally published a new version of that, which is particularly focused on current circumstances and giving more up-to-date guidance for businesses in terms of the different types of funding that would be more appropriate in the current circumstances. So again, look on our website, it is on that, and the updated guide is on there as well. And a number of organisations buy into that and provide input and information, including the British Chamber of Commerce as well. So it's an independent finance guide that's there for you to get a better understanding of how finance works and how you can manage your finances over the next, hopefully, short couple of months of difficulty. And another area that we've had particular feedback on is that there are a lot of very small startup businesses out there. We are a country of micro businesses, and we've got a very good startup rate in this country. Clearly, it's always been quite It's been more difficult for startup businesses to access finance, I would say, very generically. But particularly if you're looking to start up a business now, it's going to be that little bit more difficult for various reasons, not least of which the current uncertainty. The bank runs a number of schemes over and above CBILS, and one of those I just want to point out to you is called startup loans. And as the name suggests, startup loans is exactly that. It's loans for startup businesses, either pre-revenue or in their first 2 years of trading. So again, if you're looking for relatively small amounts of money, or you're at a very early stage, you don't necessarily have a track record to the satisfaction of a high street lender or an alternative funder, again, be aware that there is another option for you, and that's called startup loans. And again, you can find out further information on startup loans from the British Business Bank's website. If I had to promote one particular website in the current circumstances, I would suggest the gov.uk website. Okay, that has a comprehensive outline of all the government's support that's available to you. So again, the last bullet point there you'll see is the government website. Again, I know it's updated at least on a daily basis. It's probably more often than that. And it has the most up-to-date information on all government announcements. So again, please have a look at that as well. And the fourth bullet point, apologies I skipped over that, is UK Finance. And UK Finance are effectively the arm that looks after the high street lenders and the lenders. So again, if you're ever unsure about what the particular banks are doing, the lenders that are doing a part of this scheme, again, you can reference the UK Finance website to find out a little bit more as well. Over to you, Simon.
Okay, thanks very much for that, Lewis. We are just going to go into a few questions now, if that's okay. I've got some pre-scripted ones, but what we'd like to do is encourage participants on the webinar as well, either to type some questions into the chat box, which is at the bottom of your screen. It will open up on the right, or to raise your hand, and we'll come to you individually with questions as they pop up. But just to start the ball rolling, can you just give us a better understanding of how long the process might take when you apply?
Yeah, absolutely. Again, completely understandable. It would be fair to say, Simon, without apologies, that the accredited lenders have been swamped with applications over the last 4 or 5 days. In fact, they were swamped the 2 weeks previously, even though we hadn't launched the scheme. So they are gradually working through those. What I would say is what I said earlier, is the more prepared you can be, the better. We have already made loans under the scheme. We actually made our first loan within 48 hours of the scheme going open. Bear in mind, we went open in 7 o'clock on Monday morning, and most of the lenders weren't up to speed at that stage. Then again, that will give you an indication of what can be done. And we do know that through the high street lenders now that the scheme is flowing through. They are trying to deal with it as quickly as possible. You'll tend to find that the high street lenders will look at their existing clients first, for obvious reasons, not least of which they'll have a degree of information about those businesses already, and they don't have to go through a full opening a business account, taking it forward. So be wary of that if you are approaching a lender that's not your current lender for various reasons. But again, the process and the reason why we chose the existing scheme was because those 40 accredited lenders have used it for a considerable amount of time. The processes and the systems are already in place. They're streamlined as far as possible to the existing bank processes to make it as quick as possible to get money out the door. So again, I can't give you a definitive answer because it's varied, and we're very early doors, realising the importance of speed here. But all I can simply say is a number of lenders have already made loans under the scheme, and actually a number of them made them within 48 hours.
I think some of the things that we're picking up is slightly related to that, is in terms of the bank's ability to cope under the current restrictions, either with travel, key workers, sort of apart from that. But in terms of people, the number of people that have actually got working, if they're put in quarantine or whatever the case is, are you picking up that there is an issue in the system with regard to that so far? Are you confident that it's the early days and things will get smoother as time goes on?
I've no doubt they'll get smoother as it's gone along, and as banks get more used to it. I think the important thing is, you're quite right, Simon, is in reality the banks themselves are businesses with human beings in them. and they're experiencing the same issues as any other businesses at the moment. Well, most businesses at the moment, in terms of ways of working, levels of workforce that are actually falling ill themselves and having to self-isolate at the moment. We're not picking that up. I think that's partly, if I'm being honest, masked by the fact that they're just dealing with a massive level of demand at the moment. So they are full, for want of a better phrase, and therefore they're going to have to work that through. I'm sure if they had double the workforce, that would do quicker. The reality is they haven't, but they are looking at expediting that. And like any other business, certainly if you're a customer, you would have got the email. There are business continuity plans in place, and I know the technology is such that that's not stopping them dealing with the process and actually getting offers out and loan agreements signed up. But again, they have got significant demand. So it's first and foremost, it's that level of demand that's having the implication as opposed to their internal resource.
Just to try and encourage others to participate, and so just don't keep seeing my face on the call and there's a change. We've got a question from Helen Green, which you've typed in by text, but if I can encourage you just to express that in words as well. I'm going to try and unmute you, Helen. So are you there and can just ask you a question for me?
I can answer if the technology fails us, Simon. So it'd be fair to say that this is probably one of our top 10 questions at the moment, and it relates very broadly to equity funded businesses first and foremost. So clearly there are a number of equity funded businesses in the UK, and the particular issue that we face there is that the investment community in particular for relatively small early stage businesses, has, how do I put this politely and professionally, has fallen off a cliff. So the investment community are finding it very difficult. So a lot of VC-backed businesses, private equity businesses are finding it very difficult, particularly if they're in the middle of a funding round, to actually close that funding round. It's very difficult. It's not difficult, but it's quite difficult, as you probably appreciate, for a high street lender to assess an equity fund proposition, particularly if that equity funded business is pre-revenue, and even if they're revenue generating, making a loss, to demonstrate whether or not they're viable or not going forwards. That's why you have differences between equity funding and loan funding. It is something that we've got on our agenda that we're looking at and working with government to see ways in which we can do that, because as an organisation we also make significant equity investments as a limited partner, so we're very close to that issue. I think Helen's follow-on question is a valid one. She talks about well, let's split it into two. The first one is majority owned by a PE fund. Helen, it might affect your SME definition. It might affect whether or not you're classed as an SME. So when you say majority owned, it is literally 50%. So actually, first and foremost, it doesn't really matter if it's non-UK or UK equity funded. If you've got an equity fund, a VC, that's more than 50%, you probably fall out of the SME definition. So in terms of CBILS, that's the key one. If it's less than 50%, it's actually irrelevant whether or not it's a foreign owned or a UK-backed VC. It's more about the ownership. And again, we've got some additional caveats which allow us to go up to 50%. It's not normally that high to reflect equity funds and how they operate. So a couple of things there. It's quite difficult to use CBILS for a lot of equity funded businesses because they don't necessarily financially show that they're viable in the traditional way. If you have got equity funding in your business and the equity fund manager or the equity share is more than 50%, you may not qualify for an SME, and you have to currently be an SME to qualify for CBILS. The non-UK is less of an issue for us.
Okay, we've got a further question from Sam Fells.
I can answer that one if Sam can't.
Shall we just read the question first, just so we can be clear on that? So there are two parts to the question. Sam, hi.
Hello, can you hear me?
Yes.
Great.
Would you like to over your mic?
It's very flaky, so apologies if I cut out. My question relates to how long the scheme will be open for. We don't anticipate needing to access support at this point in time, but we do potentially anticipate cash flow issues further down the line because we work to very long lead times with our customers. So we don't really know what the long-term impact of the COVID-19 situation will be on our business. So I was interested to know how long the scheme is likely to be open for, should we need to access it later in the year. And having explored some of the lenders who are taking part in the scheme, I was quite surprised.
Okay, Lewis, can you hear me? Can we go back to the answer for that?
Let me answer your first question in terms of how long it's open for. What a great question. I wish I could answer that one. So as you probably appreciate, it's been a matter of trying to get the scheme up and running as quickly as possible. If you look at the information, it's been set up as a temporary measure, because I think we all hope that certainly in terms of the immediate impact, it is temporary. So we're working roughly as it currently stands to a 6-month timescale. But again, fully appreciate that none of us probably know what's going to happen in the next couple of weeks, let alone the next 6 months. However, as it currently stands, the scheme is set up as a temporary measure in the hope that we can resolve the issues over a 6-month period. But I do fully take on board your comments that actually the implications ultimately for most businesses will probably extend well beyond that 6 months, even if the actual physical, medical side of things and the practicalities resolve themselves in that period of time. So I think what the question is what's the timing like? So again, I've just said to you that at the moment, in the first couple of days, the demand on the banks and the lenders has been quite huge, and that's creating some operational issues. That's obvious; it would do that, as in every area. But again, what I would say, start thinking about submitting an application now. Don't necessarily submit it, but think about it now. So again, from my point of view, I think you need to plan first and foremost to look at what the next 3 to 6 months says in terms of cash flow, because as much as that's going to be reduced, that's what's robust. But again, I think that in a very short period of time, it's probably going to become more apparent to us what the longevity of the scheme is going to be and how much we need to look at the scheme for. But at the moment, sorry, I'm certainly not. I'm sure some bigger, better people in the organisation are, but our priority is to get the scheme up and running, to deal with the issues that we currently face, so we get as much funding out to businesses. So from my point of view, it's still prepare and plan. Think about submitting an application. If you do have that one-to-one or telephone conversation with your lender, still have it, still do the work. But I do fully accept your point that actually the ramifications may be longer term than that. None of us know that at the moment. So do your planning, take guidance from your bank if you can do in the short term as to when the timing of an application is best suited. That would be my suggestion. In terms of the lender terms, what you'll find is that in reality, the lender will do what they'll normally do. So they'll make you an offer and they'll give you the T's and C's of that offer as if you were paying the interest and fees yourself. Okay, so the offer will reflect what the terms and conditions are from day one. It will just be that effectively there will be an instrument in place for us to pay the first 12 months of interest payments. Okay, but again, they'll give you a loan agreement and T's and C's that will affect the loan from day one. Okay, there's a separate process you go through whereby we, government, effectively pays your interest payments and your fees. So again, don't worry about that. It will be transparent as it should be and as it is currently as well. The second part, actually, I probably misunderstood that then. So the second part of your question, thank you for submitting it, and hopefully you can catch some of what we're saying. But I know that the Chamber will probably come back out with written comments and feedback, so you're not missing out. Don't worry, we will reply in some shape or form. Again, it's exactly that. Yes, to some degree, it's good news that the impact will be later rather than current. And we know at the moment there are lots of businesses faced by immediate cash flow, and to some degree, the banks are trying to prioritise those. End of the month typically has been the monthly salaries, and I know the banks have focused very much on their clients who will be struggling to make payroll this month. But again, what I would say to you is prepare now, plan now, get everything in place. If you are able to have a sensible discussion with your lender in terms of timing of your application to them, particularly if you have a relationship with your existing lender as well. Do that now. Don't necessarily submit your application now, but start a dialogue now.
Thanks, Lewis, for that. A question I've got here is that you've touched on it slightly in your presentation, but a lot of lenders are taking personal guarantees.
Yeah.
Why are they doing this? And it's felt, just from feedback that we've got, that might be putting people off actually applying. Do you mind just replying to that one directly?
Yeah, no, absolutely right. I can understand that. And again, that's one of the top 10 feedbacks that we're getting. So, the way that the scheme operates in very, very simple terms is that we expect the lenders to follow their normal process. Okay, so you go to your lender, the lender assesses your proposal, and without the guarantee, they'll accept some of them and say, yeah, we can support it. That normal process is typically around taking security. So as part of that, they will often look for personal guarantees, and that has become a fairly standard lending process for most high street lenders. So initially what we're asking to the lenders is do that process, have a look at what's in place. However, if for whatever reason there's a lack of security, the security isn't sufficient, you can take this guarantee, and that guarantee will enable you to make that lending. And actually what we've also done is we've also given the discretion to say, actually, for loans of less than £250,000, we give the discretion not to have done that process in terms of what you'd normally do in terms of security, either taking it or looking and assessing it and making sure it's available or not. So we've given the lenders discretion, and it would be fair to say that the discretion sits with the lender. And from day one, not all lenders have taken that discretion and have carried on as business as usual and looked at their security process and taken personal guarantees as appropriate. They can do that. They can do that. Okay. What we've had is that feedback from SMEs that actually that's a real sticking point for them. What we're asking in that case is, okay, does that mean you're not going to borrow money? Does that mean you're going to close your business? What does that mean in reality if you're not going to take the loan out because you've told us you need the loan? Okay. But again, I would reiterate the fact that actually that personal guarantee does not involve taking your house as that security. Okay, and that's the important thing as well. What you would have found over the last couple of days, however, and it did start with NatWest and then RBS, is that banks have started to relax that because they found that as being a real sticking point for a lot of businesses. And actually you need to understand that in the context that pre-COVID-19, less than 25% of all businesses actually borrowed money. So for 75% of businesses, it's a whole new experience. It's very scary at a very scary time. And some of the normal processes and the normal lending practices are completely new to them. So it's coming as a surprise to a lot of businesses what the normal lending practices are. But the lenders, government, Treasury, the Chancellor, ourselves have taken those comments on board over the last couple of days. And we've already seen changes within the high street lenders. And I expect more of those high street lenders to change their tack in terms of security and, more importantly, taking personal guarantees. NatWest and RBS already done that. They did it 2 days ago. Barclays literally did it at about 3:30 yesterday. I expect the others to follow.
Okay. Similar sort of one, this is in terms of rates. After the first 12 months, which interest is taken care of, there have been some scare stories about where the rates will go to after that. Is there any help and support that you can give in terms of making sure that rates aren't opportune for the lenders at that time?
Okay, opportune, and certainly we are not wanting the high street lenders or any lenders to profiteer, because again, if you appreciate that the public purse is picking up the interest payments. So from our point of view, a lot of the pre-discussion, but although it was literally the weekend before last Monday, was talking to the high street lenders to talk to them about realistic interest rates they charge on the loan, full stop, from day one. And again, it comes back to the point that Sam very kindly raised, is that actually the banks will give you the full T's and C's at the start. And what they'll do from an interest rate point of view, they'll explain whether or not it's going to be fixed, variable, and they'll give you on what basis that rate will exist. Okay, it's very important from our point of view is, yes, we will pay the first 12 months, but there's certainly no expectation from our point of view, and it's not the feedback from the banks that as soon as that 12 months is up, they'll hike it. What we want the high street lenders to do, and all the other accredited lenders, to say, this is the interest rate for this loan as it currently stands, And the mere fact that the bank is paying the first 12 months and the government is paying the first 12 months does not mean that we're going to hike it after 12 months or charge a different rate, whether it be higher or lower as a result of that. All we're simply doing is paying the interest rate on the first year of a 6-year loan. Okay, there should be no reference to the fact that immediately after that 12 months, the interest rate goes up. It's a different vehicle. All we're simply doing is trying to make it easier for the SME by reducing their costs from the outset, not subsidising the interest rates of the banks.
And this question is not wanting to dwell on the negative, but in case there is a case where the customer doesn't believe he's being treated fairly, is there a process to go through in terms of raising those issues?
Absolutely. I'd like to say it's us, but it's not going to be us, and that's not me sort of passing the buck. But the lenders are the lenders. They're governed by the same rules. CBILS doesn't change that, so they've got to do the right thing by the customer. So it's things like the banking ombudsman they need to be contacting.
One of the current issues that we've got, and certainly was picked up on our webinar yesterday when we focused very much on employment and employment law at this stage, is about employees that might be furloughed at this stage. So or members or businesses are likely to have a cash flow implication if they've taken the decision to put employees onto the furlough scheme. And there will be a delay, no doubt, before they're paid back in terms of what support will come from central government, because that timescale is not sure yet. Is that type of cash flow something that this scheme is meant to support? Is that clear at this stage?
Thank you, Simon. We talked about this, didn't we, just before the call? Again, things are moving quickly. Government announcements are moving quickly, or the announcements are being made, and there's always going to be that level of crossover. So what I would say in that respect is that actually when you're submitting an application to a lender, you submit a cash flow over the next 6 months of what you know. So it's down to you really in terms of what you put into that cash flow. Bear in mind that will be the level of funding that you're taking. The loan is made to you, and therefore it's for you then to manage your cash flow beyond that point in time. What that effectively means in reality is that actually, if we'd taken out that later scheme from the equation, then yes, you could have met your staffing costs, the costs that you had to make with your staff as part of that working capital deficit, what you had to do, what you didn't have to do. That shouldn't necessarily change, because you'll either know exactly what the position is in terms of your ability to claim back that salary cost, for want of a better phrase, or you'll know a rough timescale for doing that. Factor that into your cash flow, okay? But again, we have seen a number of applications that have just been put through, quite rightly, and accepted and paid out on the basis of, I'm just going to basically effectively use my gross salary cost. If I don't incur them, I don't incur them. Or if I do get the money back, then I manage that, and it helps from a cash flow point of view, because again, you will still be making the repayments on your loan. So it's really a matter of putting it back on the SMEs a little bit, Simon, and saying, what do you know? Or whatever you know at that point in time when you submit your cash flow, that is what the situation is. And you must factor in the positives, hopefully, of the other support that's available to you from a cash flow point of view. But you're taking a commercial loan at the end of the day.
One of the final questions I've got here is, how do I know my bank is included in the scheme? I think that you said earlier there were 40 signed.
Yeah, so absolutely. So again, this is one of the top 10 hot topics in our world at the moment. I know it's a very sad world at the moment, but it is. So what we've simply done is we've swapped over the 40 plus accredited lenders from the predecessor scheme that existed as of 7 days ago, and just simply flip them over to CBILS. We've got a fairly good spread, but we realise we've not got a total spread. As you probably appreciate, we focus on high street lender. They still have the largest by far business base, customer base. I know it's changed a little bit over the last few years, but clearly we want to get as many of those potential businesses in that scheme as possible, or eligible for it. If you look on our website, and that was the last but one slide, one of the tabs on that website actually has a full list of accredited lenders on it.
That's perfect, thank you.
We've got all the high street lenders, and we've got a fairly good mix of asset finance providers, invoice finance providers, and some of those alternative funders that were always there to take that slightly higher risk deal, slightly early stage deal as well. If the subsequent question is, Simon, maybe I'm shooting myself in the foot here, what are you doing about the other lenders? It'd be fair to say that in the same way the lenders have been inundated with businesses, we've been inundated with lenders wanting to be accredited. So one of the hot topics for us is to try to get as many of those lenders accredited as possible. We'll obviously have to prioritise those. I do apologise. That's all we can do. We're prioritising the basis of coverage, ability, impact, business space, etc. We'll try to get through them. I won't tell you the number, but it's horrific.
Okay, thank you. We empathise with that. And the next question focused on the type of lending that this might support. We've gone through overdrafts, we've gone through term finances, so it's standard loans. What about things like invoice discounting or asset finance? Does it cover those sort of things as well?
Yeah, all four are covered. So if you look at the slides, we do term loans in their basic term, asset finance, invoice finance, and also we call it revolving credit, but for want of a better phrase, it's overdraft facilities. Okay. We're trying to get, again, in terms of prioritising, we're trying to get accreditations around overdrafts because, again, typically, hopefully, a lot of the calls on CBILS will be about that short-term working capital requirement, and overdrafts can be a better mechanism to do that. But again, it covers those four different forms of finance facility. Okay.
I think a lot of the questions that we've gone through focused on probably businesses that have been around for a fair while. Are startups appropriate? Because there's not a lot of track record necessarily there that at this particular stage you're able to rely on in terms of a lending proposition. But would it be appropriate for startups to try and apply for this scheme?
Another top 10 hot topic for us is startups. Because a business needs to be able to demonstrate a track record, startups are typically quite difficult for lenders to support. We found that, and that's why we set up something called the Startup Loan Company. And again, when you're looking at viability, again, that can often be an issue because often lenders typically will take historic financial figures as the basis, quite rightly, and they'll continue to do that to some degree. So there's a couple of options there, and as I said, in terms of the bank, the main one from the bank's perspective, if you're in the first 2 years of trading or even pre-revenue, then you can apply to what's called the Startup Loan Company. And again, that's on the British Business Bank website for further information on that. They are relatively small sums, having said that. So the way that Startup Loans operates is that it provides up to £25,000 per person in the business. And you also need to be aware that for various reasons, it's lent on a personal basis rather than a business basis. It's lent for business purposes, but it's lent to the individual rather than to the business.
Further to that, in terms of people may have got government-backed funding before, so they might have had ERDF or ESF funding, which can contribute towards the amount of state aid that supports their business. Is there an implication that if they've had significant support from the business over a period of time, that this will not be applicable? And if they're applying for other COVID-19 related funding support, might they have a problem as well?
So I am not by any stretch the expert on the other COVID-19 support, although I understand there's great flexibility there because of the way that it's doing so. So sort of because of the mechanism what they've done through business rates, etc., they have a lot more flexibility in terms of how they operate outside of state aid. In terms of CBILS, then, as I said earlier, there is no issue. So there'll be a lot of businesses out there that have either got public money, state aid through something called de minimis. De minimis has a cap on it. That's the very generic way of giving state aid and public sector support. Forget that. It has no implications at all for a potential application to CBILS. That is also the case for things such as VCT, SCIS, EIS. Those are tax reliefs that businesses sometimes are able to be accredited to encourage investment. There are no issues there. And similarly, in terms of R&D tax credits, because they're all done under different state aid regulations, there are no issues. It should not stop you applying for CBILS.
That's fantastic. So this is the last shout for any questions from the audience. In terms of if you have opportunities to put your hand up now, if not, we're getting close to the cut-off. An hour's nearly passed us by really quickly. There are no further questions in the chat box, so there's nothing there.
Can I ask a question, Simon? I know it's dangerous. Can I ask a question?
It's very dangerous, yeah.
It is extremely dangerous, but I'm conscious we've got 7 minutes, so I could accidentally lose my connection, couldn't I? But is there anybody out there in the amongst the participants that have actually approached their bank already, got experience of applying for CBILS? Feedback is useful because we are genuinely feeding that back. If you don't feel comfortable feeding it back to me, which I can well understand, although I won't bite, if you want to feed that back to the Chamber, Simon and Hayley, I'm sure they can feed that through on an anonymous basis. We are very keen to make sure this works and works for businesses. We realise it's a new scheme. It's going to have some teething problems, not least of which the fact that we face extraordinary times in terms of operations. But again, getting your feedback. We are listening, government is listening, and we have got significant changes made to the scheme in a very short period of time. So please provide that feedback if you have actually approached your bank in the meantime.
So no immediate hands have gone up on that. So that's either good news and you don't have to lose your connection. So that's fine. I will just keep my...
Sorry, Simon, I was going to do a shameless plug. I did mention the importance of preparing and planning. And I did notice that one of the next webinars that the Chamber are doing is with Kaylee Williams of Duncan & Topless. And I noticed that Kaylee's actually looking at how you manage your cash flow and how you plan and how you do your cash flow forecasts. Again, I can't stress that enough. That's as important as anything in the next couple of days for you. Because again, your application to CBILS is going to be based on that cash flow forecast and what the impact of COVID-19 is going to be on your business going forwards. That's what the lenders are looking for. That's what the lenders are going to look for when they actually grant the loan.
Fantastic. With that, I'm going to wrap up if that's okay. And I would like to thank Lewis for his time. That's been really useful in terms of the spread of information that I hope you've got and the level of detail that we've gone into in quite a short period of time. Thank you once again for that. Thank you all for participating in this, what's one of our first ChamberConnect series webinars. We do have more coming up and we will promote these in an e-shop that will come out to you after this particular event. But just to build on those, the sort of things that we're being told that will be useful at this stage are sort of ones that will be next week in terms of overcoming cash flow challenges. We've got something on the self-employed legislation that came out yesterday. As I said before, we've had an employment webinar yesterday that focused a lot of questions on furloughing employees. Some more information came out yesterday on that. We'll have another webinar that just focuses on supporting businesses who are going through that process at this time. We also think it's important to look at the workforce who are working in different ways, and whether that's managing stress or it's actually team management in terms of managing remote workers. There'll be a couple of sessions that come up on those as well. So hopefully you've enjoyed this particular session. We've encouraged you to join in at a later date. If you'd like to see exactly when they are on, please go to our website, links-chamber.co.uk/events. You'll find more details there. If you have got any other comments or any questions that you want to put to us directly, events@links-chamber.co.uk is an email address where you can send send questions directly to. There will be some follow-up in terms of things that come off of the back of this today, and we'll make sure that's shared as well. And of course, as I said at the start of it, the whole webinar has been recorded and will be live on our website very shortly as well. So that's it from me. I wish you a very pleasant afternoon, and once again, thank you for joining us.